While most people are watching headlines about interest rates, the actual plumbing of the global economy just broke quietly, without a single mainstream news alert. In 1 week in January 2026, 26% of all the silver on Wall Street physically vanished. The world's largest oil choke point stopped accepting dollars, and the currency that has backed American power since 1944 just hit its lowest share of global reserves since 1994. People hear currency war and think it's abstract, a geopolitical chess match between men in suits in Beijing and Washington, something that doesn't touch your mortgage, your grocery bill, or your retirement account. That's exactly what the smart money wants you to think. Today, we're going into the hard data, the numbers the institutional investors are moving on right now, to show you why 2026 is the year the rules of money changed forever, and more importantly, what it means for you. For decades, the price of silver was controlled by futures traders on the New York COMEX and the London bullion market. Paper silver trading reached the point where the amount of silver promised on paper exceeded the actual physical metal by a ratio of 356 to 1. The entire system ran on one assumption, that nobody would ever ask for delivery all at once. In early 2026, that assumption failed. In just 7 days, 33.45 million ounces of silver were physically withdrawn from the COMEX, roughly 26% of the registered inventory, gone in a single week. Traders were no longer willing to wait. They were paying a premium to pull deliveries forward by weeks, insisting on taking physical silver bars into their own custody immediately. This sends one clear signal. The market no longer trusts the exchanges to actually deliver the metal. We saw the lease rate, the cost to borrow silver, explode from a normal 0.5% to over 8% almost overnight. And when nearby contracts become more expensive than future ones, what traders call backwardation, it means the market is screaming for metal today, not a paper promise for tomorrow. Think of it like this. A building looks completely solid, but inside, the structural engineers have already found the cracks. They're moving their valuables out. The average person still taking photos in the entrance. The question is, which one are you? But the COMEX run is only part of the story, because underneath it is a supply crisis that no futures contract can paper over. On January 1st, 2026, the Chinese government reclassified silver as a strategic material, placing it in the same category as rare earths. China controls 60 to 70% of global refined silver exports, and they just slam the door shut. Why do they need it? Because their own industrial machine demands it. Each standard solar panel uses 15 to 20 grams of silver. China's solar industry is the largest on Earth. Their EV market uses up to 79% more silver per car than traditional vehicles. But here's the factor almost nobody is talking about: the AI and nuclear power arms race. By 2030, global data center energy demand will roughly double. Big tech is turning to nuclear for reliable, low-carbon baseload power. Meta alone announced 6.6 gigawatts of nuclear capacity deals in January 2026. And here's the number that will shock you. A single large nuclear reactor requires approximately 56,000 ounces of silver for its control rods alone. That's not optional. That is a hard engineering requirement. We are looking at a multi-million ounce demand black hole that earlier market forecasts completely undercounted. In mid-January 2026, silver broke above $90 per ounce, a new all-time high. On the surface, it looked like safe haven demand. The real story runs far deeper. While the industrial scarcity was building, the geopolitical ground was already shifting beneath the dollar. The petrodollar, the agreement that has anchored American financial power since 1974, is facing its most serious stress test in 50 years. The deal was simple. Saudi Arabia sells oil exclusively in dollars, America provides military protection. Every nation that needed oil suddenly needed dollars. The demand was artificial, but it was enforced. Then, in 2023, Saudi Arabia completed its first yuan-settled oil trade with China. Not a test, not a rumor, a completed transaction. In February 2026, Iran began charging yuan-denominated transit tolls on tankers crossing the Strait of Hormuz, the choke point for 1/5 of the world's daily oil supply. This is a live de-dollarization test happening in real time. In March 2026, China's payment system CIPES processed 1.22 trillion yuan in a single day, a new record. The BRICS Plus alliance has built a settlement mechanism called the Unit, 40% physical gold, 60% BRICS national currencies, that allows major energy producers to bypass the US dollar entirely. This isn't theory, it's operational infrastructure. And here's what makes this different from every previous dollar decline prediction. Sovereign wealth funds from Saudi Arabia, Brazil, India, and over 40 other nations are publicly, quietly, increasing their yuan-denominated holdings while reducing U.S. Treasury exposure. This is public data from the IMF and the Bank for International Settlements. Not conspiracy, not speculation. Survey data now shows 95% of central banks expect their gold reserves to grow this year, while expecting their dollar holdings to decline. This global pivot is hitting at the exact moment America faces its own internal crisis. The national debt is approaching $40 trillion. Interest payments are accumulating at a rate of $1 trillion every 100 days. In early 2026, those interest payments officially surpassed the entire U.S. defense budget, the single largest line item in the federal budget. Foreign holders of U.S. debt have dropped from owning 50% of the Treasury market in 2014 to roughly 1/3 today. And they're asking a very uncomfortable question. If America can't stop borrowing, what is actually backing these bonds? Here's the direct line from those numbers to your daily life. If foreign demand for U.S. Treasuries keeps declining, the Federal Reserve must raise rates to attract buyers. Higher rates mean more expensive mortgages, car loans, and corporate debt, which means layoffs and lower stock prices. Your retirement account doesn't exist in a bubble. It lives inside a system that is being stress tested right now. And the dollar's reserve status has functioned as a hidden subsidy for every American. Because the world had to hold dollars, America could run massive deficits without immediate inflation consequences. That buffer is shrinking. As global dollar demand falls, the import cost of everything, electronics, clothing, food, trends upward. The inflation you experienced in 2021 to 2023, that was a preview, not an anomaly. The dollar's share of global reserves has already fallen to 56.77%. This isn't a sudden crash, it's a slow architectural transformation, reducing American financial leverage brick by brick, trade route by trade route. To total this, there's an old economic theory called Triffin's dilemma. The idea that any nation whose currency becomes the world's reserve currency will eventually be undermined by that very privilege. The economist who proposed it predicted the dollar's structural crisis in 1960. He was right. He was just early. We have now reached the inflection point. Silver is no longer just an industrial metal. It is a strategic asset with the same monetary weight as gold. The era of a single dominant reserve currency is being replaced by regional blocks, physical asset backing, and neutral digital payment rails. The gap between what average people believe, the dollar is untouchable, and what institutional investors are actually doing, hedge everything, is never been wider. The families who understand this shift before it fully materializes are the ones positioned to protect their wealth. The ones who don't will ask years from now, why didn't anyone tell us? Someone is telling you right now. The question isn't whether the system is changing. The data shows it already has. The real question is, are you holding paper or are you holding assets? If you want the full breakdown of the COMEX silver inventory numbers, comment below. And subscribe because the next deep dive covers what's coming in the second half of 2026.